evening. It's Brian Perigimian, Senior Trader and Co-Founder of ProfessionalStockTraderLive.com, bringing you Thursday's Technical Analysis Update for February 12th. And what an absolutely wild and woolly session again we had here on Wall Street. The market gapped down this morning, basically never looked back, dropping as much as 240 points late in the session with less than an hour to go. And then all of a sudden, the stock market started finding some footing. And it found some footing and found some solace out of the fact that President Obama's administration is talking about some type of subsidy for housing to prevent all these foreclosures that are taking place. Well, apparently that soothed the street, and the stock market rallied in earnest in the last hour, closing down basically unchanged, 6.69 points, basically 7 points on the day after being down 240 with less than an hour to go. Absolutely crazy. Anyways, tonight I think is an important show on CNBC tonight called House of Cards. It airs at 8 p.m. Eastern Time, 7 Central, and it's going to tell us all exactly what caused and created this global economic crisis. And I think you ought to tune in, as I'm going to, and learn a little bit more about the details on how this all transpired. But I think I really know what the answer is. And the answer is, as I've talked before on many of our webcasts, the greed of Wall Street, the greed of big business, and the financial sector. Greed is the evil and always creates these problems. Even though we had this big sharp rally late in the day, I still think in time we are heading back down, testing those lows below 7,500. Now today, prior to the market opening, we sent out a swing trade alert to our members on BA, ticker symbol Boeing. As you can see here, it's closing at 39.86, down 47 cents. And the rationale was exactly a break below 39.5, 40 area. As you can see here, it continued making higher lows. We thought the stock was poised to break down. It did break down. We think it's eventually coming back down into this 36, 37 area. We decided to exit the short swing trade that we were in for a small gain or a break even, somewhere in that area. We do not want to be caught up in any potential further short covering, as we saw today, heading into the weekend in front of President's Day on Monday, which is an off day for the stock market. So we decided to exit out of it at a break even, no harm done. One stock that we do want to talk about that we still are in on a swing trade is Stryker. And let's talk about Stryker from a couple of standpoints. We like Stryker not only from an investment, but we also like Stryker. Going back several weeks, we put on a call option on the March 35 call for, what was it, $7.40. And let's take a look where it's currently bid right now. As we take a look, it's currently bid at $8.20. So we're going to add 80 cents on the trade, and we're going to continue to stay in this stock because we think this stock has a lot more upside in it. And let's get back to the picture on Stryker. Let's take a look at the chart here on the left. We think Stryker can be looked at not only as an investment, but from the short-term trade basis as well. This stock here is breaking out of a wedge formation going back a month, and it just finally popped the top today. In a market that was down, Stryker was up on the day. Stryker was acting well. Even when we were down 240 points, Stryker was barely down on the day. So we're excited that the stock actually popped the top out of this wedge formation, but we are on the lookout for continued strength in the stock, and we would be a buyer on this stock into any early weakness again tomorrow. And looking at the chart on the right here, looking at Stryker, you can see it's clearing out through the 20-day moving average. It's been above it now for the past 10 days or so, and we think the stock is headed a lot higher. On a short-term basis, we've got a 46 target on it, 45.5, 46 target. At that price point, we will be looking to exit our option trade, but for the time being, we think Stryker can be played from the long side on a day trade. So we certainly put Stryker on your radar for a long. The other stock we want to talk about is Energy Conversion, and here's a stock that, believe it or not, has $10.35 per share in cash. As you can see here, I'm pointing it out here on my left-hand chart here. But look at this chart formation as well. Here's another one that looks very constructive. got higher lows all the way throughout, and we're on the verge of popping back up and through this 30 level, and we'd be on the lookout for this stock to break out here over the coming sessions, and we would look to be a buyer of this as well. The stock is not yet overbought, which is an overbought reading over 70. It's getting close here, but as you can see here today, it had a great session, acted well. We think the stock could actually be put in your investment portfolio on back off. Here's the stock is still on a sell signal technically here, but we think this is going to turn into a buy signal over the coming sessions, and we think this is a stock that you can look to buy on any continued weakness as the stock is poised and ready to break out to the upside. One other thing we do want to mention is gold. And we talked about gold for a long time, that we thought gold was poised and ready to move towards $1,000. As you can see here, we talked about it breaking out the first time out or down based on this wedge formation. It broke down, held the 50-day moving average. Then we formed another wedge formation as outlined by these yellow lines, top to top, and now we rocketed all the way on up, about $80 higher since we've talked about it. We think gold is headed to $1,000, and we think that may not even cap it off. But as you can see here, while gold has surged to new highs, we do have somewhat of a lagging indicator on not so much the GDX, but if we take a look at AEM, AEM is not up to its old highs when gold reached the 920 level even. So we've got some of the gold stocks lagging the move in the precious metal. So we have a little bit of divergence, but we still think gold is heading towards $1,000 here in the coming weeks and months. So we don't have much else to report other than we would definitely recommend you watching House of Cards on CNBC tonight, 8 Eastern, 7 Central. It's going to talk about what created and caused this global economic crisis. Tune into it. We think it's going to be a great piece. Have yourself a good evening, and we'll see you in the morning. Cheers.